Hello, everybody. I wanted to talk about cost per acquisition. This topic comes up an awful lot with my clients. It seems like a lot of clients don't really know what their cost per acquisition is. Others maybe have a sense for it, but it's far too high and it's really affecting their net profit. It's most don't have a good sense for it and or know how exactly to control it. So I thought a video would be helpful in just kind of breaking this metric down. It's one of the best metrics to apply to your e-commerce business. So let me start by defining it. Cost per acquisition, cost. So it's just the amount that you're spending. You can call it marketing, you can call it advertising, but it's how much you're spending to get orders through marketing at the highest level. And we can get as granular as you care to get as far as specific channels and products. Acquisition means orders. Orders, purchases, transactions are all synonymous for it, but we're talking about an acquisition meaning an order. So just an example here, if you're spending $1,000 over whatever period of time, say a month, and you're getting 10 orders from that $1,000 of spend, that would indicate a CPA of about $100. That's how much you're paying to get that order. Now, you can apply this framework on a lot of different levels, a lot of different dimensions. At the very highest level, you can look at your entire business this way. Refer to your accounting system, your profit and loss statement for any given month, quarter, year, and look at cumulatively how much are you spending on marketing. And then figure out how many orders have occurred. And you'll need to go look at your platforms, like wherever you're selling, could be a website, maybe Amazon in addition to that. But you'll need to sum up all of those orders. And now you've got the two ingredients to come up with your CPA overall. You could get more granular, and you probably should, and look at it in terms of each of your different paid marketing channels. So scrutinize Google ads, Facebook ads, anywhere that you're spending money specifically on getting orders. It's good to get into those also and really get to the bottom of what is your current rate at as far as your cost per acquisition there. And then you can go as deep as specific products, categories of products, in addition to the channel that you're marketing them through. So that could be a single product on Google Ads. You can calculate the CPA there and decide whether or not that makes good economic sense for your business. Just want to clarify too, we're not talking about cost per action. That's another CPA that you might come across in the kind of the world of digital marketing and e-commerce. That's not what we're talking about. Action may mean things like filling out a form or signing up for some type of a service or subscription. So that's totally separate. What we're looking at here is just purely how, getting orders and how efficient are you in your spend related to that. So step one, like, how do you approach this? How do you go about figuring out where you're at now and maybe where you should be? I like to use unit level economics modeling. I did a whole video on this, so I'll link to it down below so you can get super deep into this whole idea of unit level economics. But it's a great tool to kind of work through this. So let me quickly introduce this here. So it starts with revenue, and we're talking about just some averages here. So if you have a product average order value of say $100, maybe shipping is around 15. In general, maybe $115 is what you're seeing coming through. Again, could be the whole business, could be any particular channel that you're analyzing, but we're just making kind of a model here to work through. There's variable costs. So what I mean by variable is these costs are in relation to getting this order. So you'll have some cost of goods sold. There may be some shipping costs, or there will be. You have to pay the shipping vendor to ship the order out. Maybe some fulfillment costs. That could be FBA through Amazon. It could be a 3PL if you're outsourcing your fulfillment. Processing fees or credit cards and so forth, maybe around 3% or so is what you're currently running at. And then here's the monster that we're talking about today, cost per acquisition. So you roll all those up and there's a total amount of cost, variable cost, and it leaves you with this amount, $24 or so on average per order. It's known as a contribution amount. So now you know how much you're clearing per order. And the next step is to look at your fixed monthly costs. So here's some examples, fake numbers, of course, but you get the idea. But the idea is to plug those in. So the thing here is, if you know you're making about that much per order on average, and you know that given that many orders, I just have 215 plugged in there, that you'll earn about 5,300 or so. It's also known as your contribution amount or contribution margin. You need to use this money to cover all these fixed expenses. So in this example, you have about that much in fixed costs. So in this scenario, you're barely making any money. You're barely breaking even. There's even other stuff beyond this. Certainly things pop up on your profit and loss. We haven't talked about taxes or anything like that. So this is an example of a business that something needs to give, needs to change for this particular business. If this business instead had, say, that many orders, it begins to look a little bit better. If instead they were running at something along those lines, obviously that's not a good scenario. So by framing your business out with this type of a model, it helps you really understand that figure, and you can begin to answer the question, how much can I spend to get an order, or how much should I spend to get an order? And again, you might end up with dozens of models that apply it to products, product lines, sales channels, digital marketing channels, and so forth. But this is the idea, is to model it out in this fashion. Okay, so I guess I'll say one other thing. I would start by the current state, like your current reality. What is happening now in your business and in the recent past? So what historically have these numbers been? And it will take some time and a lot of data analytics to get to the bottom of that. But that would be a good starting point, is defining where you're at today. The other benefit of this model is that you can run hypotheticals. You can use it as a forecasting tool. So you may understand that right now that's how much you're spending per acquisition. You don't like the way things are looking. You don't see a clear path of getting way bigger amount of conversions here, and maybe you can't do much with these fixed costs. So maybe this needs to look more like that. And so that's the other side of it, is projecting into the future how you want the business to look. And this model is just fantastic for sort of game planning and running scenarios of what might be possible there. All right. So just wanted to lay this out as well. So of course, there's different types of orders. Every business is different. One business might sell one product, and in general, they may sell one unit of that one product, maybe just on their website. And in that scenario, it's a very straightforward, kind of model here. You have the cost of goods sold per unit. You might have a retail price of that, and then you walk away with roughly that much money, just kind of gross top line. Another business may have several products, but typically our customers buying just one of each. So a little bit different. Now we have kind of rolled up amount of gross profit here and a bigger average order value here. And then even more complex would be a business that sells lots of products and multiple units of those products, something along these lines. So that could be your average order size right here. So tons of variance among business types, has a lot to do with what you're selling and all those types of things. But just wanted to kind of call that out, because just understand where you kind of fit into the spectrum and relate it back to how you want to model the business in terms of just overall order, sort of average orders, or maybe certain types of products or segments or categories, or however you want to look at it. All right, so tracking, how do you make progress towards all of this? So you'll need to establish conversion tracking within each of your paid marketing channels. So for example, if you have a website like Shopify, Squarespace, that would mean you'll need to have your Google Ads account, Facebook Ads account, and so on integrated into your website in such a way where those marketing platforms can see what's happening. Particularly, they can see when an order happens and how much someone spent, the revenue. If you're selling on sales platforms like Amazon and eBay, the cost per acquisition is typically embedded in there. Like there's analytics reporting that will give you that number. Or at the very least, in the case of Amazon ads anyway, you'll have the two ingredients that you need to calculate it. So you'll need to kind of export a bunch of data, bring it offline into a spreadsheet, and then calculate your CPA. Websites can be difficult. It just depends on the platform you're dealing with, and it deals with the website platform that you're using and the digital marketing platform in question. So, it could mean that there's an app in place on your Shopify that immediately helped connect Facebook ads. That might be possible. There might be some sort of native integration that just part of the platform. It just sort of comes to life once you insert a sort of like an account number for one of those digital marketing platforms. Or it can be kind of tricky. It may require some code to be inserted into your header, in your shopping cart or whatever. It kind of just depends. But you got to fight through it. You got to get all that in place. I also like to get Google Analytics in place, and in some cases use UTMs, which are just sort of additional code that you append to a URL in the digital marketing platform, which allows Google Analytics to see when those orders are happening. It's a good reasonableness check and a kind of an intermediary between the digital marketing channel, your website, in between analytics. If you get it set up correctly, will be kind of a good source of truth to really make sure that what these digital marketing platforms are claiming as revenue that they caused is truly the case. We're kind of touching on the world of attribution, like what channel deserves credit for this particular order. And that's really tricky. From Google Analytics standpoint, they use a last click attribution model, which means the last place that the person was before they clicked and landed on your website and purchased. That last place is what is the source that gets credit for that order. More and more often, I'm seeing vendors claiming business or orders and revenue from their platform or whatever they're offering. That's not last click attribution. Quick example, I have a client that's doing SMS text marketing. That particular company was claiming roughly half of all of the company's revenue in any given month. I immediately knew that couldn't be true. The client wanted me to kind of analyze this a little bit more deeply to decide whether she should move forward with them or not. Long story short, there was a fraction of the revenue that we could truly prove was from this platform because analytics could see that. And so that happens quite frequently. Just be careful of what the platform itself is claiming. All right, so within Google Ads, for example, they have a CPA built right in, and they call it cost over conversion. So this is just a snapshot of what you might expect to see there. Within Amazon ads, again, they don't give you CPA directly as a metric, but they give you the two ingredients. So you'll have to take it offline and calculate that yourself. All right, so reporting. These are just a couple snapshots of how we support our clients with this particular metric. What I like to do is kind of do it by channel and then rolled up cumulatively. So up here, this is just an example of one of the reports that we run for Google Ads, just a monthly view. These first 5 columns are the raw data that we need to bring out of the platform, impressions through revenue. And then to the right of revenue, these are all just metrics. So these are all just formulas in our Google Sheet that just runs the math here for us. Then Google Ads, Bing Ads, whatever else, all rolls up to sort of an overarching view, which in this case is just the combined channel view. This particular client just has these 2 live paid channels right now. But this is a way for the client to just immediately see what's going on with this business on a month-over-month basis. We also do this on a weekly basis. This is just a snapshot of some of the tabs that the client has access to in their particular view. So she could drill into the weekly on Google, the monthly on Bing, or the monthly or weekly for both combined. And you can go as deep as you need to, depending on how many channels you're working with. All right, so let me summarize everything here. Step 1 is to work on establishing your CPA current state and use unit level economics to do that. And start doing some goal setting and forecasting for some tangible next steps that you may be able to take to achieve, the direction you want to get to. Step 2 is to establish and verify all of your conversion tracking for the paid marketing channels and get to a point where it's reliable and you can trust that the data is pretty much accurate. The next step is to get involved in your spreadsheets. By channel, overall, whatever view you feel is good to be on top of. That's a good step, establishing them, but it's really the discipline of doing it every single week and every single month is what matters, because it forces you to be involved and see exactly what's happening in all of these channels. And it also gives you the opportunity to react if things are going well or not so well in any one of those channels. If you can see a trend emerging, you could either capitalize on it or adjust it quickly if you're forcing yourself to do this every week. Then once you're tracking all this and you've set your goals, then you go and try to optimize. You go into any particular channel and do all of the best practices and all of the work required to get better at these, whatever metric, well, the CPA metric, but whatever kind of feeds into it, you're going to go in there and actually do the work. And then finally just repeat. So it's track, optimize, repeat, track, optimize, repeat, and it just never ends. You'll be doing this forever. So I hope that this was useful. Please let me know your thoughts in the comments, or if there's any other dimensions of this or things that you would like to see more content relating to. But hopefully you will get some good value out of this stuff. Thanks.